Hi everyone, Steve Swanson with the Market Forecast. I'm visiting today with Forrest Crawford. And Forrest, you've been with us for what, a couple years?
Yeah, about just a little over 2 years now.
And Forrest trades options. He trades, I guess, the ETFs as well. You do anything else besides those?
I do not. Since
Okay.
I've learned about the ETFs, I've got no reason to go anywhere else.
So give me just a quick history of what happened, how you found us when you came here, what your learning curve was like.
Okay. I started actually with an outfit in 2009. I won't mention the names, but I did learn how the stocks work, how the patterns go. They use a lot of patterns and lines. And then after I paid thousands of dollars to learn about puts and calls.
I think you told me that was 11,000 they wanted for just learning how to do that.
$11,500 just to teach you how they work.
Okay.
And about spreads. Unfortunately, they know nothing about trading. I learned that after I've lost lots and lots of money, and started losing my health even. And I was trading with another guy that's one of your students, you know, Paul.
Mm-hmm.
And we were in the same situation, and we just got fed up with that and actually started getting physically sick. So we just kind of quit trading for a little while, and we'd try a few on our own, and we made a little bit of profitable trades. And Paul one day was at being able to work at home, and he was going through the internet. He found your site, and he started studying it. And he called me up, and we watched it, and we tried. We had our trial, and we've been with you for over 2 years now. So
Awesome.
I knew how to trade. Yeah, I knew how to trade, and I knew how to get in and out. I didn't really learn anything about the market till I got with you, and it's been great.
And if you don't mind sharing, I even real numbers, if you're comfortable with it. What I understand is now it took you a little bit of time to kind of get a feel for it, right?
Correct, it did. I would make some profit, and then I would get in a trade on my own, and not watching the forecast charts and the cycles together, and I would get in at the wrong time, and I would take an expense. But I never, since I've been with you, I've never suffered the big losses like I was doing before. I mean, it's been very helpful that way.
And
but I did,
what was the turning point for you when you finally figured out, okay, this is how I need to apply it to what I'm doing?
Okay, I guess the turning point was actually probably about a year ago when I started actually being able to look at your charts, and the picture would just come out at me. I'd see the forecast chart with momentum and short-term, say, at the bottom of the cycle, and I look and see the S&P combination chart.
So, for example, we're talking now about this chart right here, where you would see
Yes.
kind of a low on the intermediate and a low that had just formed on this yellow short-term line, and you would be saying to yourself, that looks like a pretty good place.
Yes, and even with my short-term trades, I started learning to watch those forecast lines in the bottom of your chart. And when they coincided with your cycles, like on your combined chart for the S&P, I finally started learning that everything here is telling me this market is fixing to go this direction.
So if we come back over, for example, to October, and we had an entry on October 17th, when all of these cycles right here, in fact, I'm going to change this chart because I've got a better look at it with this one here. I'm just going to change that to the SPX, or let's go to the spiders. You like to trade the spiders, right?
Actually, that's the only thing I trade.
For options. But the ETFs,
right, for options.
Now that you use double betas for the ETFs, right?
I actually, my daughter trades the ETFs. She buys the shares. I have her a custodian account, and she cannot trade options yet. So she does the ETFs, but she trades the triple
Oh,
and
okay.
doubles, mostly the triple up and the doubles down.
Great.
Yeah.
And now she's not old enough to trade options, which means she's how old?
She just turned 14. She's been at her account for about a year and a half.
And she's delightful. We'll hear from her in a minute. Now, so you would be looking at these cycles down here, for example, and you would say to yourself, you know, this is going to be an opportunity. Now, over the past year, since the light kind of went on for you, now you're mostly a short-term trader then?
Well, now I've become about a half and half.
Okay,
I'm
short-term,
half short-term and half intermediate.
half intermediate, and the intermediate lasting about 4 to 6 weeks for any single direction. And your short-term could be anywhere from a day trade up to several days, right? Or maybe even a week or so.
My longest short-term trades are usually with the 8-day cycle, so they're rarely over 3 days.
Okay, okay, and in that time, since about a year ago, when when the light went on, what you started with $300? Is that what I heard? And
yeah, I had several $1,000s, and with the other outfit, I got way down. I got back up somewhat using your system, and like I said, but before I started being able to read the forecast and the cycles and all these things together, I would get in a trade, do well, I'd get in, and I'd take an expense. So I teetered. But about a year ago, it's probably over a year ago now, I actually took an expense. I got down to $305 in my trade, and I refused to fund it anymore. And I just went completely just trusting your charts, the cycles, the forecast charts.
So a year ago, a year ago you cut everything else out and quit looking at everything else.
Completely.
Okay.
Absolutely.
Because it was distracting you?
Well, it's not only distracting, it's wrong. I mean, they're giving you a lot of misinformation, and they're not making any money from me, so I just quit. I don't listen to the news. I don't listen to, I mean, I do listen to the news, but it doesn't affect my trading.
Mm-hmm.
And I don't look at any other patterns, the MWs, cup and handles, whatever, and those vertical lines, horizontal lines. I just go completely with this, and I've trusted it. And let me just say this, $305 is where I started, and it was only, I'm going to guess, between 5 and 6 months, just over 5 months, I was up to $32,000 from $305.
That's awesome. That's awesome. And you've built that up even more since then.
Correct. Yes, I've been. I heard you say one time, and another person told me the same. When you start getting larger amounts of money in your account, you're trading with, your trading is going to change, and it's very true. It does. So I trade less often. My short-term trades come when all the cycles and the forecast charts tell me it is going to move a certain direction, and then I get in. What I do is I'll get in, and I'll mark 5 to 10% profit for the day, and usually get out unless it actually moves really fast on me, and I end up having to take 40% profit. No problem.
That's not a hard one to live with. So can I say that, from what I've heard, that it's, you know, you're well over 6 figures on what you've done from that $305?
Yes, actually, our profits are usually over 6-digit numbers. It's scary to start doing that. It honestly is. I wasn't used to using that kind of money except for my yearly income, and yeah, it's kind of scary at first, but I'm learning that you take care of it and you actually work into it. So.
That's right. Absolutely. So let's take a look at what you do. Let's start from the beginning of how you would make a trade. And after talking to you, I learned that you like to use freestockcharts.com as a little tool to give you something moving on an intraday, but you use your brokerage charts as well, right?
Well, my brokerage actually doesn't have any charts. Well, I take that back. I have an account with TD Ameritrade, and I use their real-time price chart.
All right.
Almost don't use there.
So for just looking at price, etc., I want to just kind of set this up the way you would be doing it. And I'm going to pull up the spider here because that's what you're going to trade for an option, right?
That's it.
And just walk me through what I need to do here. What would you add to this? You use some moving averages.
I use the 5-day,
okay,
the 10-day, the 14, and the 21.
Okay, so we'll just put those up here real fast. So I'll go to moving average on the price history. I'm going to make this a 5-day moving average. Okay, that'll be the blue one. And then I'm going to come up here and add another indicator. If I came over here and added another indicator here, it would add an indicator of that moving average, and we don't want that, so I'm just going to come up here and add another moving average. And on the price history, and we'll make this a 10-day. And we'll make this, I'll make that red. And then we'll add another one. Not hard to set up. Is there anything else besides moving averages that you use?
I have a Donchian channel on it, and I have I guess it's a 50, maybe a 50-day moving Donchian, I guess.
Okay. So this one's going to be 14. And then you said you also use a 21.
21,
Okay, so one more moving average here.
Those seem to be when the market is kind of sloppy and choppy, those are the ones that really come into play the most.
And the ones that I've talked about for so long, and that's kind of why you chose those?
Absolutely, because you've taught me how to use them, and they work.
All right, so I've got these moving averages up there. And you put a 50-day Donchian on here, you say? Okay.
Yeah, it's there. I pay attention to it mostly when I'm just looking at the daily charts, but when I'm actually doing my trades.
Have I got this right? What you're using?
Let's see what you got there. Plot color shading. Take the shading off and check the shading.
Okay,
the second one.
I'm just going to keep a little. I'm going to put a little shading there. I kind of like the shading, but because otherwise I'll just have lines. I'll just have lines that might be confusing, and I'm going to make that maybe green. Go ahead. I can what?
At the bottom there, you need to check plot center line and put your center line in there.
Okay, so plot center line. Okay, and that's a nice bright green. I took the shading off because you told me to. Okay, we'll look at it. No, sometimes the shading actually helps you know what you're looking at, that it's in between those lines. Now you base it on the high and the low, right? Or is it on the close?
Correct.
Do you do it on the high and low?
No, I think it's the high and the low.
Okay.
Yeah.
And does yours look like this?
Yes, it does.
Okay, so that's a pretty...
The only difference is I use a candlestick.
Okay. We got a pretty wide difference between where it was and where it could be, don't we?
Yes, we do. And I've adjusted those on mine, and I don't know which one's the best, honestly. You can play with it there and look and see if you think we should set it differently.
Well, I tend to like having most of my activity in the upper half when it's rising. So in the upper half of that Donchian, meaning that it's above the center line. once it's trending down, of course, then we want to switch that all around, and we want to. I'm not sure they're going to give me more data here, right? I only go back to 13. Is that what they're on the free? Is that all they give me?
Yep.
Okay, but in a downtrend, then I want the reverse. I want all the activity to be in the lower half of that channel. But 50 is good. 100 is good as well. But let's stick with this. So tell me what I'm looking at here, and now that we have this set up, is this where you go first? What do you look at first?
Actually, the very first thing I do, let's say this is the morning, and I'm thinking of getting in a trade. The first thing I do is go to the market forecast.
Okay, let's go there.
I look at charts. And then what I look for there is I look for. Now this is when I'm doing my short-term trades.
All right.
I look for a momentum in the top of that chart.
So you're looking for this blue line in the upper part of the chart, something like this on the 9th?
Correct. Let's say I'm going to play, because now the intermediate has turned down and we have cycles turning down, I would be doing short.
So the intermediate, when we're talking about the intermediate turning down, we're looking at this magenta line right here and this magenta line right here. Very clear that it's rolling over. Now, the intermediate line, of course, being our big money line. It is the line that's going to make us more money than almost anything else if we'll follow it, is my teaching. And so what you're looking for then is on a short-term basis, trying to get the most out of each move. So what I teach is that when the intermediate is rising, look for momentum bottoms as opportunities to play to the upside. And when the intermediate is falling, I'm looking for tops on the momentum that would help me get in. Now, I don't have a real big top over here on the 9th on the Dow, but what I do have is lowered tops, which is something we would expect in a declining market, that you'll start to see lower highs start to form. You can see it on the yellow line here. You can see it on the yellow and the blue here, but we'll start to see lower highs. So we won't get all the way to the top. We got kind of lucky there with a nice big high on the 9th. But okay, so that would be something you're looking for.
That's the first thing I look for. So
and you're looking for a short opportunity now, because the short opportunity is indicated by the falling intermediate line.
Absolutely.
Okay. Yes. Okay.
And then scroll down to your combined chart there that you keep on the S&P. And then I look at those cycles right there.
Okay.
I see that we've got the cycles are all heavy, and
so
days ago even the day was turned down.
They're heavy, aren't they? They're falling. So we've got this 55 falling at that point. We've got the 25 that had already begun to fall. We got the 21 that had already turned over, right? And
but you had the 8-day when I was watching.
Well, here's the 8-day. Here's the 8-day right here.
Okay.
And it's coming down.
It's pulling down as well. So all those cycles tell me, with the forecast chart, intermediates down, the momentum's in the upper reversal zone, and these cycles are pulling down. It's telling me we're going to have a pullback today. So that's what would make me decide to go ahead and make a.
And you trust that, huh?
I trust it completely.
I mean,
completely.
And have you found over time that as you've begun to trust it, it isn't a matter of trust anymore? It's almost like knowledge. It's like a matter of fact.
It is. It is absolutely that, because my wife has been watching me trading for years and years, and sat with me when we just lost lots of money. And now she sits and watches, and temporarily I might get in, and we may have it just for the day. It may turn and go the other way against us for a little bit, but I always tell her these cycles in this forecast chart are telling us the truth. We're just going to wait. In just a little bit of time, it turns and it makes its move, and it's consistent. Steve, I've yet to see it not work.
Thank you. I'm glad to hear that for you. I wish most people would believe that, but it took you a year to get to that point, didn't it?
Yes, it did. Just getting familiar and learning how to see it and to trust it along the way.
I think it's trust, because a lot of people, like yourself, trust other things with it and say, well, but the other thing isn't saying this. And so what that does is just create kind of a dichotomy, which, you know, I'm a mule with a bale of hay on the right and a bale of hay on the left is how I feel when I'm looking at everything else. And we starve to death or lose all of our money by, you know, not being able to really know the truth. And the truth is really found in those cycles, isn't it?
It is. It is really there. And like I said, I've come to know it. I trust it. I wouldn't play a short-term play on a weekly option and invest 200 to 250 contracts. You could hurt yourself that way if it goes against you, but it doesn't. I mean, in the last year, it doesn't. It's great.
And that's through all of this. I mean, it's through a lot of little and bigger moves, huh?
Right. The really big, deep moves, if I get a short on one of those pullbacks, I'll stay with the 8-day cycle again and write it down.
Write it down for about 4 days?
Yeah. And on your up move, of course, I finally learned, just take it up. I watch your stops where y'all are on your ETFs, and of course with my daughter trading the ETFs, we know where the stops are. When it starts to pull back with my options, if it looks like we're fixing to get a rollover, I'll sell it. And it's, you know what the profits can be. I'm talking over the 1,200 to 10,000% profit at the end of an intermediate rally.
Right. Yeah. That's.
If you told me this a year and a half ago, I would have never believed it.
Well, it is. It's real. It's real. And what we're talking about at that point is that you're saying that you're buying calls down here and you're riding them up. And
Absolutely.
On the big move, how long will you stay? Because you're normally just 3 or 4 days on the short term.
Yeah, but what I do, and I think I talked to you about this a little bit not long ago, is I tend to ride that up when the 39-day or the 40-day cycle begins to turn over. I tend to want to sell it at that point.
So when you start to see these topping out, you want to take some profits right in here somewhere, and you can see that right there on the peak of this combined cycle, right there, telling you we're going to start running into more congestion now. Right,
and you know this time I missed some of the up move that came after, but I'm not sad. I mean, well enough up to there that. You know, I can wait till the next bottom if I want to.
So when you buy an option down here, understanding that it's going to be an intermediate move, you buy more time, don't you?
Yes, I do. And what I try to do is I figure where that previous high was, because I've learned that the previous high is coming up at least to there.
Yeah. So as I teach, I say we know on an intermediate move that the move is going to be higher than the previous high in a bull market. So we know we're going to exceed that by something. So just like this low here was an intermediate low, we can see that there. We knew that it was going to exceed this high and do better. And this one over here, we knew it was going to exceed. It took a while to do it, but it finally got there. And that this one would exceed this. So a very nice strategy. So you know at least where you need to target, don't you?
That's what I do, and I figure how long it's going to take me, and I will put my option expiration date a couple of weeks past how long I think it's going to.
Well, and an intermediate move lasts 4 to 6 weeks, doesn't it? In the half cycle. We know that it's a 10 to 12 week overall cycle, but we know that half of that is going to be to the upside and the other half could be to the downside, or the other half could be, since it's a bull market, mostly chop and then just a little downside, right? A lot of chop, little downside, but it's not going to be this kind of a strong move anymore. All right? So then, now you've got this, you're looking at the 9th, is what you told me here.
Yep.
And so on the 10th, so this is the close, because that's where we closed yesterday, and so you wouldn't see any of these lines here. You just see this peak right there.
Right.
Now what do I do?
So that morning of the 10th, I know where we close tonight, the morning of the 10th, then I'll go to my pre-stock charts.
Now, are you going to make this a long-term trade, or are you going to make this a short-term trade?
Now, this is going to be a short-term. Probably, since we are getting into the phase of volatility, I wouldn't stay in this over a day. I'd be scared it's going to go to the bottom and bounce back up the next day. So this would be pretty much a day trade, and it may only be a few hours.
So you're looking, your envelope of where you're comfortable is you want to make it 5 to 10% on this trade.
That's what I'm trying for, yes.
And sometimes it just breaks through and keeps going, and you let her ride, huh?
Yeah. Before we look at the free stocks, I'll just tell you we can't pull it up on free stocks. It won't go that far. But in November the 13th, I was working. I was at a client's, but I had my computer up, and I had some reception, and I saw it was pulling down. Well,
so that's the 13th, but on the 12th is when you're talking about, because that's when these things peaked.
Yeah, it had closed up, so I was looking for a down day.
Okay. Okay. So yeah, and so there wasn't such a peak here on the Dow, but there was a much better one on the Nasdaq.
Yes, everything looked right. Everything looked good enough to me to give me confidence.
Let's take a look. Wait a sec, though. Let me come back here and look at the forecast chart for a second, so that I can kind of see what you're saying there. So the 8-day cycle, and you're looking at what day? November?
That was November 13th.
Okay, so here's the 12th. And so what you're saying is this is peaking right now.
Correct.
And
the 40-day, the 42-day there had peaked.
We're looking at a peak here, right? Just rolling over. And the red line, which is the 2025, is coming down, and the 8-day is peaking. So you're saying, hey, we could have a down move. Now, if I look at the chart here, I go, what's he thinking about? There's not much there. Where's he going? Why would he be going with a put here? We're not even to an intermediate top. But you're looking at these cycles and saying the propensity and the opportunity for weakness is because all these things are turning down. Correct. And even though we've been high, I'm expecting something to pull back in here. Now, interesting that sometimes pullbacks in a bull market are flat spots. But yes, you managed to pull money out of this?
I did.
Okay.
On that day, I watched again my stock chart, and it was real time, and it hit a moving average and showed me it was moving down. And
okay, wait. Let me go there. Let me go there. So we're looking at. I'm going to zoom in on that period of time. We're looking at November 13. I'm just going to zoom in more. Okay, so that is November 13th right here. So 12th is where you were. Looking at everything, it all looked kind of high. But the 13th is where you're going to end up making a little bit of a trade, a day trade?
Mm-hmm. Yes, a day trade.
Now, I'm still not seeing, I'm seeing a good bar here. It went really low, went really high, started off a little bit higher than where it closed. Show me how you made money.
Okay, let's take and go to the hourly chart.
Okay. Okay, and here's the 13th right here. Ah, there are some nice red bars coming down there, aren't there?
Yes, they are. And so I watched it go up. And another thing that you...
So this is interesting. So it actually went up a little bit in the morning.
Right.
Here's the 12th where we had the peak on that momentum saying, hey, we're going to, and all the cycles are rolling over saying we're going to have something going down. So it went up a little bit in the morning. Go ahead now. You're saying I taught you what?
Yeah, what you taught me is that a lot of time when we have these little gaps, the morning it'll move a direction and it's going to give back some of what it gained or sometimes what it lost. So I wait until I see it starting to move back, and you can see those bars when they move back and got back under the 5-day moving average, which would be the third red bar, is the actual
right
one
here?
I got in on. Yes, right.
So
there.
you bought in on this bar?
That's the bar I bought in on.
And where did you buy?
I bought, now, I don't remember exactly what the price of the Spy was when I got it.
I'd like to say you bought on this first red bar. That would have been a great one.
That would have been great, but I would have been scared it was going to keep going up.
Even as it fell here, huh? Okay.
Yeah, I was afraid if it opened up there at the top, it might come down and hit that 5-day moving average and turn around.
Now this is you're talking about the five period moving average here,
5 period.
which is this blue one right here.
Correct.
Okay, and so you waited until it got back under there. Now that it did over here on this bar on at the 1 o'clock bar got below that.
Yeah, it did, but I was watching it. It went down and came back.
Okay.
And I was going to wait and see if it was going to go on back up since it had already gone. But when it started on down, I bought it, and I bought a put. Actually, I bought 200 contracts.
200 contracts right here as it started to come down from where it opened, that bar.
Right.
So that's the 2 o'clock. Oh, but actually you did the 130 as I recall. So it was in between this, wasn't it? Was it? Let me come up with 30 minutes.
But it was. See if you can. Yeah, if you can get the 30 minute, it may show the lines a little different there.
Okay, so about 130 is where you got in. This is the bar here, huh?
Right. Okay. Right in there. It's under. Yeah, it's under the 5-day. Actually, I was on the 15-minute chart, but you can't get it on there.
Okay.
For the day.
So
that's real close right there where I got it.
So 203. Now, which contract did you get? 200. Which 200 contracts of which strike price did you get over here?
I would have got. I could look that up, but I would have gotten the 20. It was either the 204, I believe, is what I bought.
The 204s. Okay.
Yeah, on my short-term trades, I try to stay right at
the money. Okay. So this bar opens close to 204-ish, and then you jump in and buy 200 contracts. Now let me come over and just kind of see what that looks like. So we're looking at the spiders.
Yeah, I paid $1.45 is what I paid for it.
You paid $1.45. And which date expiration did you have? Oh, you know what? This doesn't go back far enough here.
Yeah.
Well, what was this? What was? I'm just going to use the Decembers just for the fun of it. What strike price? 204.
Yeah, it was a 204 strike price.
Okay, and you paid how much?
I paid $1.45.
And it was on November. Oh, these were puts, right?
Correct.
And on. So I'm a little bit lost here.
You're in December still.
So November 13. Okay, there we go. Let's come back to where that was. That looks better. I was confused. Okay, so here's the 13th right here. These went from 14.95. Well, actually, it was the 13th. You bought on the 13th?
I'm not sure which expiration date you're looking at.
Yeah, these unfortunately are December's. Tell me how it went, because I can't.
Okay.
This won't pull up.
Here's how it went.
The November's.
It was actually a weekly that would expire the next week because this was on a Thursday.
Okay.
So I paid $1.45, and at the bottom of that red bar, I stepped back in the barn because I would have probably sold it somewhere close to the center of the Donchian channel there, your center line. And thinking it might bounce off of that. But I went back in the barn where I was working on the horse, and when I came back, it had gone to the bottom, and it was $2 and $2.10.
So wait a minute. You just picked up 200 contracts. This is going to be a day trade, and you went to the barn?
I went right back in, just inside, just a few feet away, of course.
Okay.
And I could come back. I step in and out. I shape a shoe. I'll come out and clean a shoe, and I'll look at my computer. And it had gone from $1.45 to $2.10. That's
okay.
65 cents or $65 a contract.
Not bad, and that's about what, $13,000 of profit.
$13,000 in probably between 20 and 25 minutes.
And even had you mistakenly held on to that for another half hour or another hour, you'd have still been okay on that.
I would have been, yeah, I would have been, but I don't, when I get me a profit on those short terms, when I get my profit, I'm happy. I just get out.
Yeah.
Do whatever.
Even with the expectation that this was a good cycle, this was a momentum cycle coming down, but looking at the top of the bar here to the bottom of these bars here, you're thinking, you know, maybe that's probably the, you know, all we're going to see today, right?
Right.
Okay. Okay. And so this is just a day trade. Now let's come back to what we talked about here on the 9th. When we were seeing things starting to break down. So over here on the 9th you saw this right here.
Yes, there's your momentum top.
Momentum top with everything else rolling over. And looking over here, all the cycles are still weak, right? Everything is coming down. Our combined line is coming down. We had already started breaking through our moving averages over here, right?
Yep.
And if I'm looking at that here on a daily basis, we'll come over here to the 9th. Now it's the 10th that you're actually going to play, though, because the 9th is the
right.
So you would get in here and you'd buy like the 205s, right?
Yes, I would buy the 205 right there.
Okay. Now I should say you didn't play this one though, because
you didn't, and the only reason was I was going to a client's house in a part of the East Texas that had no I had no internet.
And for everybody's information, tell us what you do.
I'm just a horseshoer.
They have a special name for it, though.
They call it farrier.
Yeah. Okay. But you've been doing this for how long?
I'm pushing 40 years doing this. I did my first horse when I was 15 years old.
Wow. That's awesome. All right. So we're looking at the 9th. Everything, it looks like it's lining up, and we can see on the beginning of the 10th, the opening of the 10th, we're coming down and we're starting to fall. You're probably going to wait a few minutes, make sure it's going in your favor. Is that what you do?
That's what I do. I watch a few minutes after it opens, and it was going well enough. I think you can go to the 15-minute chart on this one. That's the one I use to make my entry.
Okay.
Actually.
Yeah, let's go to 15-minute, and we'll go to the 9th. Okay.
All right.
So it's actually be the 10th because the 9th was the spike
10th,
out.
yeah.
Mm-hmm.
Right.
And
the way I watch them, it opened.
Open with a gap down.
A gap down. And I'm always leery that it wants to give back a little bit after
right.
that. So
it would want to. It would probably want to try to fill that gap or something. So you want to see how it follows through.
I would have waited, and if moving down to that 21-day moving average, I would have waited to see if it's going to bounce up off of that.
That's this light blue line right here.
Correct. Yeah. And the next bar, when it didn't, and it went up there to it, and then came back
right
under where that bar had opened, that would have been my entry.
Okay, so we're looking at about 205.38. So let's just go look at that option. So the spiders, we'll look at the 205s, and we're going to be looking at December what? That was the 9th, so can we do you've probably gone 20th?
Is that the weekly? Yeah.
Yeah. Well, that's also, yeah. The 20th is the monthly as well. So, okay. So if we're looking at the 9th, right here.
10th,
So it would be, yeah, the 10th is where we could see that it closed at 390
right.
on the 10th, right? 390. But where it finished was $1.68. So it would have been somewhere between there. So let's say it's at $2.25 or even $2.50.
Uh-huh.
By the end of the day, it closed at 390.
That's a pretty good little bit of profit for the afternoon.
For a $1.50 profit. Am I figuring that right? So if we're looking at $1.50 and you usually buy 200 contracts, which would be $20,000 profit if, I'm sorry, is that right? $100 times
Yes.
200, 20,000, and plus another half, that'd be almost 30,000 for that move for that day. So that can build your account pretty quickly, can't it?
Very quickly, yeah.
But where would the question for me is then? So you got in on that bar and you're watching it here. How long would you have played it?
I likely would have, I would have probably, when it went down, let's see where you're at there, on that bar, so I stayed staying underneath the 5-day, that bar right there, not the one to the left of the green bar.
Uh-huh, right here?
That red bar right there. When it went down and started back up, the next bar, when it opened and started back up there, I probably would have took my profit right there, because like I said, if I can get 5 or 10%, I'm happy. But a lot of times it does this. It runs away with you, and you have to take profit.
So you're using the 21 as the bounce point. Why didn't you use the 21 to say, that's the line I want to just stay below and let her ride down?
Because like you've taught me, a lot of times on these, when they're trending, and I know this is just a 15-minute chart, but it will trend along that 5-day, and if it passes it, sometimes it goes on. It keeps going.
Now the 5-day or the 5? No, I'm a little confused because you keep 5-period moving average. So, but now that's really tight on a faster chart. I like a 5-day moving average, but if I'm playing on a faster chart, I'm like with you, a 21-period moving average here isn't bad. For making sure, but you can see that a lot of times if you're using that, it worked here, but look how low it is over here. If you were playing a call here, you wouldn't want to be using this 21 way down here. You'd want something tighter. And the hard part was this didn't trend for you early enough. The trend really came here.
It did. So I missed some profit, but I made some profit, and that was good enough.
Yeah. So we're looking at maybe even if you only picked up 50 cents a profit, you're okay with that, huh?
Oh yeah. Like I said, if you compound your money, and you do it at even 5% at a time, it doesn't take long. You've doubled it. So yeah, I'm happy with 5%, 10%. I'm happy with any profit at all, really, but usually 5 is very easy to get.
Even 5 to 10% on a quick trade like this, and if it hadn't gone through that 5 and just kind of trended like it was going up here, you'd have made a killing, right? So instead of 30,000, you would get in here, take your profits over here somewhere, or did you take it right here at the 5 when it broke?
No, I would have made it when it started headed back to the 5. I wouldn't want to give up any more profit at that.
Okay. So if we made even 25 cents, let's say, on that trade, and on 200, that's $25 times 200. So that would be what? 100 times 25 is 2,500. 200 would be $5,000.
Right. That's just over 9%, almost 10%.
Which is people don't understand that sometimes these little moves just like that can be so profitable, and when you catch the big ones going the other way, those are just gravy, aren't they?
They are. They sure are.
But these are the ones you want to make sure you don't mess up on too.
Right. You don't want to. If you get in on that one, don't just put it and go away unless you put a limit order real close to your entry. And
unless your barn is really close to your computer.
that's right.
Okay. All right.
A few steps away.
All right. And
That's what you taught me to do. I think that's pretty much what I do, Steve.
and that's made all the difference.
That's made all the difference. It's completely. I get into trades, and like I said, if I get in a short-term trade and it starts going against me right then, I double check what I've looked at on your charts, and when I see I saw what I saw, I don't worry about it. I just relax, and it just a little bit, it's going to come that way. It always does.
So right here on the 5th, we had the 8-day cycle topping right there. We had all these other cycles heading down, right?
Correct.
And so we're just looking right here on the 10th for an opportunity, and you found it. You took take some early profit. Don't worry about it. Now, people with a little longer horizon that are saying, "Well, Steve, you know, maybe I won't trade as many. Maybe I'll only trade 100, or maybe I'll only trade 10. But I want to trade the intermediate move that's coming down." What would you think of that idea?
You can do that in a good, strong intermediate. I have done that for a few days, but again, I do like you were saying. I ride that down with the 8-day cycle as it's going down. Another thing that you taught us is that when this intermediate low is forming, volatility really builds.
These bars get really big, so you could make a lot of profit on one bar if you wanted.
And then you can lose it all the next day.
Yeah. So, what would be another option then for a person that has a lot of money tied up? Maybe what you could do is exactly what your daughter is doing. Is you could add to your portfolio some inverse plays that aren't going to have time expiration and volatility work against them quite so much, right?
Right. Absolutely. And she does that. She is in the SPXU. And if you'd like to, she's here. You could talk to her and see what she did with her SPXU.
Yeah, let's put her on and just talk to her for a minute. Thank you.
Okay, let me grab her. Hey, babe.
Hello?
Hi, Isabella.
Hi.
I talked to you a little bit earlier, and I just introduced you to everybody here. Now, you've been doing some trades for about a year with your dad, you say?
Yes, sir.
Uh-huh. But it's mostly just recently that you've kind of caught the gist of everything to do, huh?
Yes, sir. That's correct. It's kind of just now I'm starting to do like some trades on my own, and I'm starting to see some things on my own myself without him like showing me step by step.
And you are how old?
I am 14.
You don't sound 14, but that's so wonderful. Now, tell me about maybe just your last few trades. What have you been doing here? So here's my forecast chart up here for the cycles. What have you been doing with this?
Oh, well, I've been doing just pretty much what my dad has been doing. We are waiting when all the dodging channels are like crammed at the bottom or at the top, when it looks like they're starting to turn down maybe.
Uh-huh.
We're basing all of our trading on this.
Right. So let's take a look at maybe just last couple trades, because you got in at this nice low right here on October 17th. And when you saw that, what made you decide this is a good time?
Well, I saw also on the market forecast where they're like on this chart anyway, that everything looked like it hit a bottom, and it looked like, okay, it looks like maybe started going to go up for a pretty good, yeah, like right there, it looks like going to go up for a pretty good time. And so we thought, since we saw that, we thought, well, that'd be a good time to get in UPRO or something like that until it just stopped.
Right. Now, you were probably also listening to my commentaries, right? So you heard me saying that we're starting to hit a bottom. and we're going to have a good move up. Did that help you?
Yeah.
Okay. I just want to make sure that people understand that it's not just looking at the chart. Sometimes it's a little coaching from what I write in the commentary too. So all of these cycles were right here making a low, and if you looked at the combined chart, what we saw was that the combined chart actually started turning up right here.
Right.
And so you got in on the 17th, right?
Yes, sir.
Okay, so that would be right there where I told everybody that looked like a good place. And then you chose to stay in. Now, what did you buy right here?
I bought UPRO.
UPRO. So let me pull up UPRO.
Okay.
Which is a triple beta, right?
Yes, sir.
So on the 17th, UPRO was about 102 at the close. I don't know. Did you buy it at the close? Did you buy it closer to the open?
I can't. Did I buy it at the close or closer to the open?
I don't remember. Sometime during the day.
It was sometime during the day.
Okay. Now,
Yeah.
aren't you in school?
I'm homeschooled.
What a great education you're getting, aren't you? Okay.
Yes.
Were you
I've been homeschooled all my life.
where you can actually, well, that would explain why you sound so much older. Okay.
Oh well.
So you got in during the day, you took a break from studies, or this was your studies for the day, and you wrote it up. Now, how long did you want to stay in, and what was your decision on this? It's going up, it's going up, it's going up.
Yeah, I wanted to stay in where until it looked like it was like done going up, but we kind of miscalculated that part, but I still got a great profit and I was happy with that, and I said, we'll see that next time. This is a good lesson to learn.
Okay, well that's okay. That's okay. What day did you get out?
It was what day? Let's see. I can't remember. The price was $124.15.
124.15. So about right here where these three red bars are. You know what?
Yeah.
That's not so bad because you were starting to see it stall. You were looking down here and you could say, well, the 25 just topped out. And
Right,
we are getting close to the 30 top. So not so bad, right? But
yeah, not so bad. It was a great profit.
yeah, so about 20 points there that you picked up, right?
Yes.
Let's see, if you got in over here at 102, well, about 22 points. And that wasn't a bad little one. Now, are you doing anything for the downside that we're currently in?
Yes. Right now I am in an inverse. It's SPXU.
SPXU.
Yeah.
And
I got in.
very, very typical of the inverse is they just make these peaks, and and they're done, right? So we look for a peak
Right.
and then they're over. We look for a peak and then they're over. Okay, so when did you get in on this one?
Let's see. I got in. I'm going to say about a week ago, like from today, I think.
Okay, so that would put you. Do you know the price you got in at?
It was $40 even.
About $40 even. So that could have been toward the end of the day, or even right here at the beginning of the day. About 40.
Yeah, I think like at the beginning of the day.
Okay, so that would have been 3 days ago. Does that sound right?
Oh yeah. Yeah. Okay, that sounds right.
At the opening
So
there.
many, I'm trying to keep them all in order.
Okay, so not a big deal, but you're already at 41.74, so you're up $1.74 on this already. And we can see that the cycles are working in your favor here a little bit, right? This one longer cycle probably is going to be a little hindrance, but we got the preponderance of the move still in your favor. And we're looking at the forecast here, And we can see that the intermediate's still coming down, right? And these are kind of doing some little bouncing off of deeper lows here. But anyway, so that's great. And what are you going to use as a stop to make sure that it doesn't get away from you?
Use as a stop. Well, we're gonna. Well, we're waiting. We're just seeing at a part. We're gonna be watching the intermediate to turn over.
So what I always recommend is that, now here's a 15-minute chart, for example. Your dad and I were just talking about that, and this red line was a really good one on the way up here. Do you see how that was a really, and then you know, once it broke through here, it was all over. I'd recommend that you just kind of watch these moving averages here and make sure that it stays above those and protect your profits. And right now you've got a pretty good profit going on here, a nice little rise going on, and it's going to put some distance as that starts to rise. It's going to put some distance between those moving averages. So you want to watch that tight one, the 5, kind of staying with it, maybe as a quick reversal, because this thing does tend to, as you can see here, this is SPXU, it goes up and up and up, and then in a couple days, boom, it can go the other way on you real quick.
Yeah, so it's like, it looks like we're like pretty close to a peak.
I don't know if we're close to the peak. One of the things that we'll do to determine that is we'll look at the 8-day cycle. So let's pull that up for you and take a look. I think I got a moving wait a second here. I don't want the cycle. I'm just going to change one of these cycles down here. Instead of the 55, I'm just going to put the 8-day on there for a minute. So the 8-day cycle bottomed here. The 8-day cycle bottomed here. The 8-day cycle looks like we got another day or two, and it's going to start to roll over. But as you can see, that's not always indicative of the end. See how this 8-day kind of, these cycles really aren't good enough for what we're doing here. And wait a second here, I need to just close something. Oh, my computer wants to shut off. No, don't do that yet. Postpone that.
No.
Okay, so if I crunch this up a little bit, let me just pull in some more data. That may be better to do for a moment. And it's telling me that the cycles that are really active right now are 42. I've got a 41, so not far off. A 26, a 25, and a 21. We've got those, right? And then a 16 and a 12, 11, 10, 9, 8. There's a bunch of those right down there. But I'm gonna change this to a 12 for a minute. Let's just look at that and decide, make a decision about that. We'll go from 8 to 12. And I'm going to look at that and see if that looks any different. So that's that black line right there. That's a 12-day, and it's not far off from what we saw on the 8-day, but it should begin to top out in the next few days. So what I would do is make sure that you got your stops underneath that, and like I just showed you could even use it on a 5 or day moving average. If I put that up there on the chart, a 5-day moving average, I'll change this one to 5. Simple moving average, 5-day right there. What I would do is say, now you can see it makes a little dip below there from occasion, so I might even go to an 8. Okay, something like a 7 or an 8-day, just a little bit wider. Let's go to 7 for a minute. Okay, and I would say as long as it continues to ride above that, I want to stay in, but I wouldn't want to give back profits below these previous highs either. You with me?
Right.
So I would say that'd be worst case scenario, but I'm hoping that I'm going to get a few more days ride out of this and let that average just kind of come up with you, and then hopefully what will happen is that as it comes up, you'll have a day or two stall. And that typically happens, you know, something like this where the moving average can catch up and it can get you out. But if you get a nice big spike like this, where it goes up, 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 and then starts to reverse, sometimes it's good to take profits on this. This is
Yeah.
a tradable stock more than a holding stock. Inverse plays are to be traded, not held for too long, right? You want to hold it because the volatility is so much higher on the downside. You want to hold it as long as you can, but don't expect what we had on the upside.
Right.
Great.
Yeah, we don't hold those. We don't. I mean, you know, you're not supposed to hold them, but we not stay in these like 3 to 4 days, like the most, and then we're out and we got profit and we're happy.
That's awesome. That's awesome. And so you've been doing pretty well?
Yes, sir. So far I've had one loss, and I'm hoping to keep it that way.
One loss over what period of time?
What period of time? Like, yeah, about. Let's see. So probably a month. Yeah, probably a month.
So just one little loss?
No, I lost like most of my money. Well, less than half.
And what did you do wrong?
Well, I stayed in it like longer than I should have.
You mean now you lost the money on that big move up that we had? You lost some of that money?
Oh no, this was like back like a year ago.
Okay. Well, now you made me feel better. Okay. So.
Yeah. No. These we learned from that one mistake, so we see it now.
Okay. So, but now you're not losing. Now you're getting all of these are just gains for you now. Now you're in the groove, huh?
Yeah.
Awesome.
Yeah. Now I made all my money back, and I'm in the groove now.
Awesome. Well, Isabella, thanks. What are you studying? What do you want to become? What interests you?
Oh, well, I have horses, and I'm training horses right now. So I'm kind of a trainer. I've trained several horses for my dad's clients and like that. But just mostly training, probably just to say training.
And training and trading, huh?
Yes, training and trading. Yes.
Awesome.
So
Thank you so much,
good, so.
All the best to you. It's incredible. At 14, you've begun to figure this out, because I'll tell you what, it's a security that most kids wouldn't even think about for years and years and years, and never get to the point that you're at. So congratulations.
Well, thank you so much.
You're welcome. Let me say goodbye to your dad, and we'll wrap this up.
All right. Thank you. It was nice talking to you.
You too, Isabella.
Bye.
Bye-bye.
Hey, Steve.
Hi. So I think that's a pretty good wrap-up. You're a short-term trader. You're not even trading any ETFs, huh?
No, I don't. I just do options.
Okay.
I'm sure one day when I get enough money, I'll be doing just ETFs.
You'll want something with a little bit less that you have to watch for as closely.
Exactly. I can put it in and put my stops and go do whatever.
Awesome. Well, it's been great. I appreciate your willingness to share this with everyone, and we'll stay in touch and see how it continues to do for you. It sounds like you've got the plan, and it's not very complex, is it?
It is not. It takes a little patience, a little working with. It shows up, then it's easy to watch. And Steve, I mean, I'm with a lot of people who tell you we appreciate the effort you put in to do this, because it works. It absolutely does work.
Isn't it amazing that we have a tool here that literally takes away all the brain damage that was caused by everything else we ever had to learn, huh?
It is amazing. It's amazing. I'm just glad you were able to do it. That's an amazing thing.
All right, Forrest. Well, thanks for your time. Appreciate it so much.
Okay. All right, Steve. I appreciate it. We'll talk to you later.
Take care. Bye-bye.
Bye.